The refinery has since denied any price hike, stating that petrol remains 1,200 naira per litre. But the gap persists, and the World Bank warns this could deepen inflationary pressures in Nigeria's economy. How is this possible? How can locally refined fuel be more expensive than imported fuel when the crude comes from the same ground? The answer is the crude supply crisis I just described. Because Dangote is forced to source 30 to 40% of its feedstock from international markets, paying premiums, freight costs, and insurance rates that have all been driven up by the Iran war. They are operating at full commercial terms. No subsidy, no discount. As Bad emphasized, the Crude for Naira program is not a discount, now a subsidy. It is priced at full international benchmark crude oil pricing. So, the refinery is exposed to every shock in the global market, while also being starved for the local crude that would make it competitive. This is the paradox of African industrialization.
However, given our preference for Nigerian grades, we go back into the international market and we find those very same grades that we have preferenced, that were denied to us, now being offered on the international market in US dollars. And so we do purchase those. And right now, there's obviously a global thirst for crude, no matter where it comes from. So that has mean there's a significant premium being attached to Nigerian crude grades, upwards of now we're paying over $18 a barrel premium for those same Nigerian crude grades. So 35% under crude for Naira we get allocated with no discount, no subsidy. It is international benchmark pricing. Then we have to pay international benchmark freight rates, and freight has also been severely impacted and gone up, insurance rates, etc. So there's a misunderstanding the Crude for Naira program is somehow a discount or a subsidy. It is not. There's arm's length relationship. We purchase that crude, we transport that crude, we insure that crude as if we are fully arm's length at international benchmark pricings. And every one of those cost inputs has been impacted by this crisis. Then we're still finding, and so far we continue to see those other Nigerian crude grades appearing on the market, and we're still willing to pay that premium. However, it's disappointing that it's coming back to us on the open market, and that value between the purchase price and the premium that we're now seeing is money that Nigeria is leaking to the international trading community.
Okay, let's look at the quality revolution. What no one is actually talking about. Now, let me tell you what the refinery is getting right. Something that doesn't make headlines, but matters enormously for the public health and the environment. The Dangote Refinery produces Euro V standard fuels with a sulfur content of just 87 parts per million. In contrast, much of the imported fuel that has flooded African markets for years contained over 1,800 parts per million of sulfur. Dirty, toxic, and damaging to both engines and lungs. In fact, David Bad, the CEO, stated in February 2026, "We do not import refined fuel. Everything sold as petrol, diesel, or aviation fuel is refined here to Euro V standards." He also accused certain oil marketeers and regulators of undermining local refining by importing cheaper, substandard fuels instead of patronizing domestic products. This is a battle for quality standards across the continent, and Dangote is winning it, one shipment at a time. Now, let's look at the expansion ambition. What comes next for the Dangote Refinery? Here is where we look at the future. Because Aliko Dangote is not stopping. According to Investment Monitor, reporting in April 2026, the Dangote Group is seeking at least $40 billion in fresh capital to fund an expansion program designed to lift its annual turnover to $100 billion by 2030. The African Export-Import Bank has been named as a supporting financer. And here is the key detail. Output at the refinery is targeted to rise from 650,000 barrels per day to 1.4 million barrels per day. That would more than double its capacity, make it not just Africa's largest refinery, but one of the world's largest. At the same time, the group plans to quadruple its fertilizer production to 12 million tons per annum, making it the world's largest urea fertilizer producer. But here is the question that keeps energy experts up at night. How can Dangote expand to 1.4 million barrels per day when they cannot even secure the crude to run 650,000 barrels per day as of now? The $40 billion question literally is whether Nigeria's policy framework will rise to meet the ambition of its private sector. As energy analyst Abdulrazak Hamzat warned in The Guardian, the world has shifted. If Nigeria fails to fix its international bottlenecks, this refinery will exist without influence, and the country will remain a net fuel importer in a seller's market. Okay, bottom line, what must be overcome? Let me leave you with 3 realities. First of all, the opportunity is real. The Iran war has created a structural shift in global energy markets. According to the International Energy Agency and Reuters, the disruption to Gulf exports is forcing buyers to diversify, and African producers are gaining ground. Nigeria increased output in March, while Gulf producers cut supply. That alone is unprecedented. Secondly, the bottlenecks are solvable, but only with political will. The Domestic Crude Supply Obligation under Nigeria's Petroleum Industry Act exists. It needs enforcement, transparent allocation methodology, clear regulatory guidance. These are not engineering problems. They are governance problems. Third, the next 6 months will determine everything. The ongoing corrective shutdown of refineries' residue fluid catalytic cracking unit represents what Kepler calls a critical inflection point. A successful restart could shift this refinery from marginal participation to structural relevance in global fuel markets by mid-2026. If that happens, and if Nigeria fixes its crude supply, then Africa has genuine energy weapons. If not, then Dangote will remain what it is today, a miracle of private sector ambition held hostage by a public sector failure. Aliko Dangote has proved he could build what 16 Nigerian governments could not. The question now is whether Nigeria will let him run it. As usual, thank you for listening and sparing your time to build more knowledge in the geopolitics, especially that affecting Africa as a continent as a whole. You have been good listeners. I implore you to subscribe to the channel, Share, like and comment, and let us keep pushing the positive narrative about our continent forward, especially in these crazy times where all coverage pushed by the West is mostly negative leaning. Thank you for your audience today.